which is on financial services. We are extremely delighted and honored to have the Honorable Kevin Lynch, Vice Chairman, BMO Financial Group, to be here with us today and share his experience and his comments with us. We have Mr. Nitin Kanchan, President, International Business Trade Infrastructure Limited, who will be moderating the session. The keynote speaker, the Honorable Kevin Lynch, Mr. Rohit Bhargav, Chief Representative and Managing Director, TD Bank, and Mr. Sanjeev Mittal, Country Head, India Scotia Bank. They will be the panel of speakers here. Nitin, may I request you to please start with the... you can.
Good morning, everybody. It's my great privilege to moderate this session. Without taking much time, let me welcome the Honorable Mr. Kevin Lynch to deliver his address. Please.
Thank you very much. What I've done in the spirit of innovation is to pass out a handout, and hopefully you find that useful. And if you want an electronic copy, Nadira can pass it out to you. I just want to say at the start, I've been coming to India for a number of years, and we owe a huge debt of gratitude to the ICBC. It actually does a wonderful job of actually building bridges between Canada and India. And as Nadira said, we've got a long way to go, but we wouldn't be where we are if we didn't have that active support of the ICBC. So on behalf of all my kind of colleagues in both kind of the private sector and in the public sector, thank you for what you do, and thank you for the invitation to be here today. It's a really great audience. Let's give them a kind of a... I have to tell, it's always nerve-wracking for a public servant, and so did a great job kind of talking to audiences for the first time. And I want to just tell you one story, if I can, which was I was the Deputy Minister of Industry in Canada in the late 90s, and we were opening our first giant science experiment the Governor General talks about from time to time. And Professor Hawking from Cambridge was coming over to open this. The Prime Minister of Canada, Jean Chrétien, at the time, was going to introduce Professor Hawking, and we had 3 Nobel Prize winners to each talk about how important this event was. And I was there as the public servant to sit in the background and make sure kind of things moved. And so everything was going smoothly. Professor Hawking was there, the Nobel Prize winners were there, the Prime Minister was due to arrive. I was running around with his speaking notes, just as the aide-de-camp will do this afternoon when you see the Governor General. And I got a message that, unfortunately, the Governor General's plane couldn't land because there was fog, and I would have to go on. So suddenly I thought, I have to look at these notes. So we're now up on stage, I'm sitting in the chair, the event is starting, and I'm looking at this page. They go on for about 20 minutes, and they said absolutely nothing. So the first Nobel Prize winner gets up, and he talks for 3 minutes about kind of how important the science is, and he was extraordinary. The second one, at this point, I'm throwing pages under my chair of this dreadful speech, which of course I had signed off. And so it finally came to my turn. I got up to the mic. I was just absolutely appalled. And I stuttered out in about 30 seconds a welcome to Professor Hawking, and sat down, mortified. I thought it was the worst I'd ever kind of done in my life. And as I sat down, the Nobel Prize winner to my left patted me on the knee and said quite loudly, "Well done." And I turned to him and I blurted out, "Well done." I said absolutely nothing. He said, "Nobody expected you to say anything, but nobody thought you'd be brief." So I learned from that, expectations management is a very important part. So today I may not say much, but I will probably be less brief. I want to talk to you about, and again, provide a little bit, my colleagues who are here working on the ground will talk, not just about their own kind of banks, but I think about kind of doing banking between Canada and India. So I'll spend a little bit more time perhaps giving the context, and that's the nature of the handout I gave you. And really the subject I talk about is kind of financial services in a changing world, because it is a really changing world. And if we want to increase trade and investment and other things, the financial services has to be part of that. So if we don't have strong financial linkages, both kind of Indian financial services kind of moving to Canada and Canadian financial moving here, it's going to be harder to achieve those aims of increasing the bilateral trade, the investment that the minister talked about, and all those sort of things. So in a sense, financial services is the great intermediary in market economies, and we should kind of look at that. And in a sense, what I would argue sometimes that if you want to look at the financial services, you want to really think about the context. I think for public policy, context is the equivalent to the real estate mantra of location, location, location. So if we don't understand the context, we're actually not going to make the progress that we probably want to do. So today, I have 9 observations on context, which I'll do at a Canadian speed if I can. The first one, you can see it on the pages, and this kind of goes through is that Canada and the U.S., and there's a tendency when we look to kind of Asia, we may or may not see India as clearly as we should, and I think it's equally true when kind of Indians look to North America. They may not see Canada as clearly as they possibly might, and we're both guilty of this. There's a Pew Research Institute, which is one of the great global research institutes, has put out a really interesting kind of poll, and it's called One Continent, Two Very Different Publics. And if you look at the mood there is a great difference between the mood of Canadians and the views of Canadians about their economy, about their society, about the world, very different than the United States. And there's also been a very different decade between Canada and the United States. We, in a sense, avoided the financial crisis in Canada. We've had much better luck on the fiscal side in Canada. In many ways, part of what we have in common with India is you avoided the financial crisis, we avoided the financial crisis, and that wasn't just be luck. That was because of good public policies in both countries, and I think good bank management in both countries as well. But just that there is quite a difference. In many ways, you could argue that difference is growing between Canadian attitudes in business and in civil society, and it's worth, I think, noting as you think about where you may want to do business in North America. The second is the world is changing very quickly. And this is more a message to Canadians, but it actually drives the relationship with India. In many ways, we're in a 2-speed world now, and the West is in the slow lane. And the emerging markets are in the fast lane, driven by China, but it's all emerging markets. And here for Canada, our imperative is diversification. We're overly reliant on one market, the United States. 89% of our trade is with the OECD. In other words, 89% of our trade is with slow growth countries, not fast growth. So it's to our advantage to actually expand, just as Nazira said, to actually be more ambitious from that. So that's kind of a mutually reinforcing. It's not just something that would be nice to do, it's something that we should do between our, and that's a business argument and a public policy. The third in there is that fiscal situations really matter. And there I think Canada has done, to be honest, quite well over the last little while. If you take our total government sector, so it's both states or provinces and the federal government, our net debt to GDP is 36%. The United States is close to 90. The United States is actually close to where it was at the end of the Second World War. That's a big difference. And we view a low debt to GDP ratio as 2 things. One is it gives us national insurance. In a volatile and uncertain world where you don't know what's going to happen, it's like having life insurance when you're 25. You don't know what's going to happen, but everybody takes out life insurance when you're... I think fiscal policy that way is the same way. And secondly, in a changing world where you have to do new things, it gives you the capacity to act. And if you're tapped out, like a family on a credit card, you may know what you want to do, but you're not able to do it. And so that's how we look at, and I think certainly Sarah can talk to this as well, that's how we both collectively in the business community and in government view fiscal policy in Canada. It's not just an end, it's a means to doing other things. The fourth, and I think this, I'll come back to this, is really important. We're in the world of an energy revolution. It's not a small change. I think this is one of the biggest changes since the Arab oil embargo of kind of the 1970s and certain things. And it's a supply shock this time, not a demand. And the supply shock is shale gas, shale oil, and all those sort of things. And it impacts you here in India, and it impacts us in Canada. In many ways, there's a mutuality of interest coming out of this. So think of what's happening. Demand is shifting to unconventional buyers, the emerging markets. 97% of the growth in energy demand in the next 25 years will come from the emerging markets. 25 years back, 95% of it came actually from the Western market. So it's a complete change. The other change is the supply is going to come from unconventional. It's going to come from oil sands. It's going to come from shale gas. It's going to come from shale oil. And that's in very different locations than before. In North America right now, the U.S. is moving to energy self-sufficiency. That's a huge change. And so the two changes that I think actually kind of create mutual interest between India and Canada is, for you, security of supply is an issue. You want to make sure you have multiple sources of supply in a volatile and uncertain world. For us, security of demand is an issue. We have a single buyer, and that buyer is going to be buying less, and there's more uncertainty about that. So what we have to do is diversify into Asia and other markets, and what you have to do is diversify into North America, and we would hope Canada. So there's an enormous amount to do. If we can build on that, I think it can drive financial kind of flows, it can drive investment. So sometimes I think we try on too broad a path, and it might be interesting. One of my suggestions is we might want to focus on energy, and if we can't drive the relationship on energy, I'm not sure where we'll drive it, and it'll drive everything else. So one of my suggestions, and we should talk about it today and elsewhere, is maybe we should be more focused and actually see how everything flows from that. So that's the energy revolution. The next one is natural resources, as you know, and if you believe in the growth of India and China, and I certainly do, and I think markets do, then actually natural resources and the ability to access them at reasonable prices is going to be crucial. And that again drives a mutuality of interest between India and Canada. You'll need them because you have enormous potential to grow, and we have them, and we have enormous potential to sell, but we've got to diversify. So it comes back to my theme about diversification drives us, and I think can drive you and drive us together more than we've done in the past. The next one, 6, is that macro frameworks matter, and this comes back a little bit to what I talked about. And in Canada, we actually worry about our frameworks. For example, in the financial sector, we, like you, avoided the financial crisis. Canada's now been ranked number 1 for the soundness of the financial system for 6 years in a row, and we take great pride in that. I mean, it doesn't happen by chance. We worry about it in a regulatory sense. We worry about it in a corporate governance sense. We worry about it within the banks, as my colleagues can talk about. But that actually gives us a structural advantage in an uncertain kind of world, and so we think that's one of the areas we should look at. I just put another graph in there on the right-hand side to show, because emerging markets, and certainly your fantastic governor of the central bank, Raghu Rajan, has talked about the effect of quantitative kind of easing on emerging markets. If you look at the graph, the Central Bank of Canada, we are one of the few Western central banks that has not engaged in quantitative easing. We have not made that structural change. And again, we have a different approach, and we don't think a giant expansion of balance sheets is the way to do it for our kind of economy. So again, we're more in line with some of the issues and concerns of your central bank than others around the world, and it's not always known. 7, I only have 2 more to go. It's a graph of income equality, inequality, and economic mobility. And the Governor General will talk about economic mobility this afternoon, and it's so important in your country as it is in ours. And our message here is that, long term, you can't be a sustainable, competitive economy unless you have a dynamic society. The two go hand in hand long term. And again, it's interesting. I just have some graphs to contrast Canada with the United States. There's a tendency, as we worry about rising income inequality in the United States, to just assume it's the same in Canada. It actually isn't. In many ways, we actually have less inequality in the last decade. We always have to worry about it, but actually the trend is not up, and it is in the States. And again, I think that's a long-term competitiveness. There's a graph in there, next one, 8, and this is very much the Governor General's message about the changing nature of competitiveness. It's not just producing a good at a low cost. Increasingly now, it's, do you have innovation? Do you have the workforce that can do different things? Do you have entrepreneurship? And that's actually the new nature of competitiveness in all the countries. We've got a long way to go. You have some challenges here as well. But I think the key message is to be competitive in today's world and tomorrow's world is going to require different kind of investments than it was certainly 25 years ago when I started. And my last one is the financial sector, and as well as being the Vice Chairman of Bank of Montreal, which is one of Canada's large banks, and it's actually the eighth largest in North America. I also chair the Global Advisory Council of the World Economic Forum on the global financial system. And I just put a graph in there which was at Davos this year in terms of what are the concerns, and many of them are shared very much between Canada and India, and they came up again by your governor and mine at the G20 meetings. And if you look through, they are fragmentation. We're not actually kind of becoming more homogeneous. We're actually fragmenting as kind of large countries implement differently. Not good for countries like Canada, not good for countries like India. And I think we can make common space here as we build a relationship, not just in terms of trade and investment, but actually shared public policy space internationally, which builds bridges. The second one is trust. There's a huge decline in trust between the public and the banking system, less in Canada than the United States, less in India than in some other countries, but we should all worry about it. And the trust is actually diminishing between countries. You see the resolution authority where the United States is not willing to accept the authority of other jurisdictions. It wants to impose American resolution on subsidiaries elsewhere. Not clearly that's indicative of a system. And lastly, unintended consequences, and I put the list there. So I think in all those things, the bottom line for Canada, and I think India would share it, is we need more and better international coordination and cooperation. And that's certainly a hallmark, I think, of not just the economic relationship, not just the people relationship, but I think we can play together more of a joint role in international forum going ahead. So to conclude, I think there's enormous, I'm a huge fan of the potential in the Indian-Canadian relationship. I guess I feel a little bit frustrated from time to time that we're not realizing that potential. And I think from a Canadian side, I would say we should focus perhaps more on one or two of these uniquely mutual reinforcing opportunities, probably energy as a start, and focus more of our efforts on that. I think from the Canadian financial sector, we worry that FIPA is not in place, and part of the reason Sarah mentioned as a policy issue, but from a corporate issue, a lot of Canadian boards worry that if there isn't a free trade agreement in place, and if you don't have a FIPA, it actually is a very difficult thing to actually do that investment. So it's actually more than just a policy debate between countries. It's a real debate because of our corporate governance in Canada. Second is, I think the absence of a deep, liquid corporate bond market in India hurts. In many ways, Canadian firms invest in bonds. We don't do big equity investment. Other countries do that. We do that more. So the absence of that makes it harder for us, particularly in infrastructure. Our classic way of investing in infrastructure is through kind of a corporate bond, rated, liquid. When that's not available, harder to do. So again, it's not that we necessarily don't want to invest in infrastructure. I think it's a huge potential, but actually the modalities matter. And I guess there are a number of regulatory and other things, but I think the two I'd raise. Last is, I think, as part of this, is not just government to government. I think the more we bring our private sectors together on two things. One, to be frank on the challenges, but secondly, even more importantly, to be frank about the opportunities. I worry that we talk too much about the challenges and not enough about the opportunities. That's what excites people. That's what generates innovation. That's what generates business. And I think that's what's going to lead to the more ambitious outcome that you talked about. Thank you very much.
Thank you very much, Honorable Kevin Lynch. That was a perfect start to create a kind of a framework that we need to go ahead with. As an inspirational speaker once said, your present circumstances don't tell you where you would go, it would tell you where you would need to start from. And that is exactly where we are trying to determine here as to what else we need to do. Couple of things which I drew out of the points which you made. One was the debt to GDP ratio at 36%. It is an ideal situation for us as growth economies, as emerging markets, to offer those kind of opportunities on a return side, on the incremental investments that can come into the country. And speaking on the debt market, which is a case of point, we need a deeper set of debt markets here. One such move which the government of India made was to float rupee designated dollar bonds, and IFC Washington did that. And TD Securities was a lead manager for this, and it was wrapped up a 3-year bond offering at 775 all in. So these are a couple of situations where we see opportunities between these two countries happening. And for limitation of time, I draw the two stalwarts here. Rohit, if you have to make some comments on the way ahead.
And that's a part of the reason of why Canada banking system did so well. How do you take this forward? I think I like Kevin's idea of let's focus on one thing. And you spoke about, Kevin, about energy. I believe India's energy needs will quadruple by 2030. Another 15 years' time, 4 times. And guess where one of the biggest sources of energy is? It's Canada. And we're certainly doing our best to make sure that there are some investments that come from India to tie up the long-term needs of India's energy needs by investing into something which is the future, the oil sands. Canada has one of the largest sources outside of Saudi Arabia of oil. How can we tap into it? USA does not seem to need it for the next few years. It has to find somewhere. So we've got to be able to bridge and find it, and I think the government of Canada has been so keen to pursue it, to diversify into other markets as well. So that's a wonderful way to do it. And India has been targeted, and I think it will. The fruits will show. There are lots of efforts happening. Maybe nothing has happened so far, but I do know that everyone is keen. It's a win-win situation. India is resource hungry. Canada is resource rich. The two have to meet in spite of it. Now, the way forward again would be, and again I come back to something that was raised earlier, it's the travel time between Canada and India. Do not underplay the requirement. Why do I say that? I see it even in a bank, and certainly I'm sure for every company I think I can speak of. It's the mid-manager level which make things happen, not the board of directors. They only give a direction. If you can't get people who are keen enough or easy, like who can travel to India and back easily. Remember, what in Canada you're up against is mid-management level who are used to traveling. Their overseas trip is to the USA. They go in the morning, come back in the evening. Certainly by the weekend, they're back with their families. In India, you've got to spend more than a weekend here. You've got to understand here to make things happen. The first thing that can happen is make travel easier, so that will happen. I missed the direct flight. I used to take the Air India flight when it was there, a direct flight, or kind of thing there. But now it's not there because the stopover in Europe is so unnecessary and time consuming. But those kind of things will make it easier for people to travel, especially with these 480s and all that. Make it easier. Let's more people come and they will make it happen. Like I said, the need is there, the demand is there. Let's make it happen. So I'll stop here. Sure.
Thank you for that a different perspective altogether to financial services and innovation. So we innovate the mode of travel here. With this, I will hand it over to Sanjeev for his comments.
Thank you. Honorable Lynch and panel. Honorable Lynch, sir, fellow panelists and esteemed guests here. The forum, it has been very rightly mentioned in the opening comments about the various things that India needs to do in terms of trying to take the advantage of what Canada has to offer. But I would just like to highlight a couple of key issues where there is complete complementarity between the two countries. Enough has been spoken about the energy sector, but one other sector which needs attention is the agriculture sector. We are the largest importers of fertilizers in India, and Canada comes as a natural partner. Likewise, pulses. I think if both countries agree on few low-hanging fruits such as fertilizers, energy needs, infrastructure investments, and decide an action plan with a milestone timelines, things will start happening automatically. Couple of examples I would like to make, which were mentioned earlier in the speech as well by Sarah. We already have successes in the form of McCain or Bombardier who have been able to do it. More recently, Canadian pension funds, we had 3 major investments of Canadian pension funds into India infrastructure, aggregating almost $500 to $600 million. One of the enablers which we can provide is swap window, which has been spoken about, so that Canadian investors can be insulated from the exchange rate risk. And with dollar rupee movement, what happened last July, does not give anybody any comfort in terms of uncertain movements. So to keep it short, what I would like to suggest to the panelists and to the guests here, that let us try to focus on 2 or 3 low-hanging fruits and then approach it with a private sector to private sector issue. Let's say Campotex having a long-term offtake arrangement with 5 or 6 Indian companies, and that trade flow is going to increase as we go forward. The RBI needs to come forward and provide Canadian pension funds 7 or 8 years hedging window, so that they can attract the Canadian pension funds investment, which are one of the largest pension funds in the world. And last but not the least, if we can make a success example and talk about our successes, McCain and Bombardier in multiple forums where ICBC and similar forums where they meet, and showcase them as examples that despite being a country where you have a lot of bureaucracy, and even in that a company like McCain, which is grows potatoes, again a restricted commodity, attached with farmers, and they can make it a success in India, then there is no reason why 500 or 600 companies which Sarah mentioned cannot make it a success. So that quick comments on my side.
Great, thanks. Carrying this ahead, I can fill you in a few more initiatives which the government had undertaken. Last year, you had the announcements of IDF, which is the Infrastructure Debt Fund. Now, this exactly addresses the kind of opportunities on a long-term basis which pension funds and insurance companies can now have out of Canada. And there are regulations now under which you can set up these funds. The other is the opening up of the banking sector. Now, this, the committee which was formed to evaluate the licenses has just concluded its report and handed it over to the government. And with merger and acquisition rules being changed for that sector, there could well be opportunities of inclusive banking being extended from Canada onto India. I mean, Canada can boast of a very strong banking sector, a very established one. And this is an opportunity that can be harnessed by Canadian institutions. Like you rightly said, the OECD does not offer you the growth, and emerging markets are the growth drivers of the world. So one has to now innovate. This is the right theme we are sitting under. Innovation is to re-engage, recreate, re-envision this entire set of possibilities which could throw up a new paradigm into the relationship that we are now professing. So since Ronu continued with the Bollywood theme, I had to change some of my notes to follow that theme. And I draw a line from a poem of Amitabh Bachchan's father. Man se hua to acha, nahi hua to aur acha. What I said is, if it happens the way you think, it's good. If it doesn't, it's fantastic. Because something better is in store for you. So with that, I put this theme ahead, that something better is in store for this relationship that we are now harnessing. Yeah. Yes, if there's...
Hello, am I audible? Thanks for the opportunity, and it's a privilege to have an esteemed panel. My question is pertaining to an observation. Basically, what I feel is the 9 observations Mr. Lynch had were exceptional. But if I add an observation from India, and the government has been trying to focus on it since 2000, is the imperative of financial inclusion. We have talked about debt market, we have talked about bond market, but financial inclusion is the most important factor if you consider India. Any opportunities that we can suggest through partnership? Because I don't think that requires any innovation, that requires simple implementation and best practices from developed markets, which are financially inclusive. Thanks.
I will just extend this question and give you an Indian update on it, and then you can take on what you wanted to ask you. The Indian government, under the National E-Governance Plan, under the Department of Technology, has started the e-enabling of government services. Now, this is a nationwide plan which has been set up, And as a matter of fact, one of our companies is one of the largest offering these e-governance and e-services to the common man, which addresses the social inclusion aspect of reaching out banking services to the common man. Now, under this, he can go to the center and get a government record, a land record, a birth certificate, a marriage certificate, get a bank account operational for him, get an insurance policy in place. So it is reaching out to the masses. And to give you figures, I mean, the 6 states under which we operate, we cover nearly 28 crores, 280 million people. So the numbers are large. And this is it's a new form of banking which is getting reached out now. So what he's trying to understand is that can the complexity, the maturity of the Canadian banking system be useful for such a situation?
Thank you both, and that's an excellent question. Let me start at a more general level. Certainly in the World Economic Global Council that I chair, one of the big issues around the table in discussions from emerging market economies, whether it's in Africa, South America, or in Asia, and especially India, is that emerging markets feel that they're policy takers, not policy partners. That the priorities are very much fixing the Western banking system, and we have to do that because it's a global market, but it doesn't mean that that's a sufficient thing, it's a necessary thing. And how do we bring some of the other priorities, particularly from emerging markets, into that global thing? Because sometimes it's easier if other countries are doing it at the same time, it's easier to do it yourself. So that's kind of a broad one, which is where I think Canada and India can actually have a shared space in the G20 and others. So that's at a higher level. The Canadian side, to be honest, we're a very small country, population-wise, but not geographically. We're the second largest landmass in the world with a population of 34 million, and yet we have a completely connected system, and we've had that for quite a period of time. In fact, we've been technology leaders in banking because in a sense we had an imperative to be inclusive. We couldn't just connect our cities and not connect the north. So we both understand that issue and we've had some success. It's not to argue you should do what we did, but we, I think, can share some experiences, and how you do it going forward is an important one. We spent with the Governor General some time with the National Unique Identifier, which is actually going to be an important part, I think, of extending kind of banking in whatever form it is in an e-world to that. Last experience I'll tell you, which was an important part of our inclusion regime, not quite banking but not dissimilar, was that when we brought in our GST in Canada, I know you're discussing that in India, one of the things we did at that time was, how do we make sure that we try and get all Canadians into the tax system? Because you can use the tax system for social means, not just to actually take money. It can actually be a very effective bilateral vehicle. And we put in a low-income tax credit, but you could only get it if you were a lower-income Canadian if you filed income tax. We now have the highest rate of tax filing in the world, and that allows us to use the tax system for social policy. In other words, the tax system has become a means of social inclusion as well. So when you think about inclusion, and it's really important, I think it can be more than just the banking system, and it can be complementary between the two. But a really important question. Thank you for it.
Yeah, sure. Rohit just wants to add something.
Financial inclusion is an excellent topic and a much needed one here. But believe me, we've got local expertise. The State Bank of India, the HDFC, has wonderful expertise there. They do not need any handholding by foreign banks to be able to achieve those objectives. But more importantly, it's the ability where foreign banks come in is to be able to raise finances for the nation. And the rupee fund, which the idea for IMF for rupee bond which is issued, is a great precursor. Along with, it's the first step, I believe, of the convertibility of the rupee. There's so many people wanting rupee kind of returns, double-digit returns on a 6-month deposit or 12-month deposit. They can't get it unless you are NRI. Why restrict it? So those bonds will help people get those returns and raise the finances. Financial inclusion is a very local thing, which in great hands, as Nitin described, this e-governance thing which is done is excellent. It's done locally. You don't need any foreign help or support for that. You don't have, Canadians will not understand the kind of volumes we're talking about. that's totally alien. The expertise doesn't lie there, but expertise lies in being able to get the right structure which will raise the finances.
As we,
Thank you.
as we,
Yeah.
Question to Honorable Kevin Lynch. You mentioned rightly about a lot of complementarity between India and Canada. For instance, let's look at in terms of your pensions. You have large pensions, aging population, and as Rohit rightly mentioned, India needs lots of long-term finance. What the Canada Pension Board has so far done, and good at that, is they have invested in a lot of real estate funds, they've entered into partnerships with infra players and real estate players, and come. But the reality, what we need to accept is that Indian currency is a depreciating currency. So if you talk debt, once you factor in the depreciation, the return is definitely not going to be as attractive as people would like to make it to be. I think what India needs and what Canada needs to look at is an equivalent of a 401k plan focused on India. For instance, even if you look at India's exposure in the MSCI index, it has about less than about 1%. Canada's investment in equities in India is not even that. So the way to go about it, if you ask me frankly, is if these pension funds come through structured vehicles into equities, and I'll give you only very simple statistic. The BSE index has been in existence from 1980, and we are in 2014, 34-year period. You take any 15-year period, month on month, the return has never been below 30% per annum CAGR rupees, and the worst has been 5% in US dollar terms. So the numbers, if you look at and look at the kind of the transparency and the online markets that we have, I think that's what needs to be pushed. It's a low-hanging fruit. You don't need any government approvals either in India or in Canada, because long-term equities are tax-free, and long-term is defined as more than 1 year. I think the focus has to be on how to attract pension monies into India with a long-term view into Indian equities through a fund route. I think that's any comments you have on that would be very useful.
okay.
Before I hand it over to Kevin, with your permission, Prasad, is yesterday the Canadians rang the bell at the Bombay Stock Exchange and it hit an all-time high.
That's a good augury.
Yes.
That's a good augury.
Maybe you should ring the bell in the Toronto Stock Exchange. And we can share in our mutual good luck. You raise a good point. Let me just give you a little bit of a history of the Canadian pension funds. I mean, Canada, I think has possibly the third largest pool of pension plan assets in the world. So it's a very large one. When I was the Deputy Minister of Finance, we used to have a constraint on the proportion of those assets that could be invested outside of Canada. We took that off because our view is that they have to seek the highest rate of return for kind of future Canadians. That's their obligation. And if that rate of return is in Canada, they'll invest in Canada, and if that rate of return is elsewhere. We're pretty unique around the world doing that, frankly, and I think that it gives an example. To be honest, I think that if you talk to those pension plans, they have some issues about whether the long-term rate of return, I mean, where they're putting their large amounts indicates where they think the greatest returns are. And so I think that to get more from them, you're going to have to convince them that the rate of return risk-adjusted is higher here than elsewhere. And some of the risks are the FIPA and others and what have you. And so it's not that they don't want to come, and it's not that governments can tell them. We can't direct them where, but they have to answer to their board that in fact it is the risk-adjusted best return on a global basis. And so that's the reason for the dialogue in both directions.
Okay, Jagdish,
Thanks.
last question maybe, because we're running out of time. If we can ask one more.
Hi, again to Honorable Mr. Lynch. On the energy front, two quickies. One is, your giant southern neighbors really doing a miracle as we speak on shale oil and gas, etc. But there's a market anomaly going on, as you know, about this whole ban on exports of shale oil and gas. So what will happen once that changes? And all the implications? And secondly, just a quickie, what's the status of that? I think it's called the Keystone Pipeline of tar sands from your country down to the southern coast. Thank you.
Two good questions. You see in the little handout I gave you, I think it was observation 4, the potential in LNG is huge. Right now, LNG is about $3.63 an MCF in Canada, North America. It's $17.02 in Japan, India would probably be 1650, I think, something of that sort. Europe, it's $11, but if the Ukrainian kind of, it'll rise. So it's sensitive to market kind of forces. And I think both Europe, because of these pressures, want to have other sources of supply, and I think Asia does. So the chance of arbitraging away those differences and creating a global gas market, not regional gas markets, is good for consumers, good for producers, good for the market economy. And North America is going to play a key role in that. Nobody would have thought that 5 years back. That's why it's a revolution, not something different. The United States, I'm not an expert in US policy, but my understanding is the United States can't export to a country that it doesn't have a trade agreement with. And to get an exception, you have to go to essentially the Department of Energy, which actually has to file with Congress. They have 3 export permits for LNG have been approved for specific destinations. We actually have 5 projects being discussed in BC at the moment. And certainly my message back home is, you know, the early mover gets the strong rates of return on this. And so there is a strong debate in Canada that we have to move, and we would encourage, whether it's Indian companies, whether it's others, to move. So there is an urgency to this. We would like to be early on. The Americans have to sort out their policy thing. We actually just, I think, don't have that. As you know, that there is a different policy. We don't have a security export policy in Canada. If we meet our environmental concerns and our others, then we can export. So this is why I come back to energy as being such a great opportunity to build the Canada-India thing. And it's on a shorter term basis, not a long term. This is not long term. I think we can start to do these things in a quite short term.
Okay, Prashant, you have a very short question because we just have a minute.
In 1995, the Team Canada mission came with the Prime Minister John Kretschmer, and I was part of that trade missions. And at that time, the representative from the same banks were here as well. Almost 18 years has passed, and still the bank's presence are very minimal or almost negligible. So if the banks are holding it, similarly, the Canadian companies are holding it, and that's why I think after 18 years, we are not seeing that result. So why the banks are holding it to coming to Canada, coming into India? Like to answer from every one of you, please.
Well, I'll let my colleagues kind of talk. To be honest, it is, you know, it is not as easy as it could be to do financial services here, and we would like to do more. And so that's kind of one, frankly, and you might have concerns with the Canadian side, and I'd leave that for you. But it is not as easy as it can be. And I think easing those regulations would actually make it easier to encourage more investment here. Secondly, you know, financial services follows trade and investment, which we go back to. And I think the more that we can increase the possibility of trade and investment, the more the banks are going to be involved. So I think there's some policy issues that could be resolved and probably should, and it would be good, I would hope to think, for both our countries. And also, financial services moves with trade and investment. And if we can achieve that, the banks will actually follow that. They are intermediaries, and they follow trade and investment.
Rohit, do you want to add something?
In fact, I must share with you, when I went to present my credentials when opening the representative office over here, he said, "Why are you here?" I said, "Why do you ask? You've given us the permission." He said, "But there are no Canadian companies. Normally, when the companies come, that's when the banks follow." So that is really the case. So we would very happy to increase our engagement. We have a rep office. Once we see the level of trade and investment going up, that's to follow, and that is what.
Okay. Sanjeev?
Just add one line. You know, for Scotiabank, we have been adding branches. In the last 18 years, 18 years back, we had 2 branches in India, now we have 5. We have a full-fledged Mokata business importing gold. And, as Rohit mentioned, the addition of branches is a function of regulatory approval and the trade. So it is trade has to increase and then the branches will increase. I think right now as a bank, I can tell you that we are well represented across the various geographies in India, across the major cities, and we have clients across on a pan-India basis. Thank you.
Okay, Nadira.
all of you for a very, very informative discussion on financial services. And thank you, Kevin. I've got lots of lines of yours to quote now for the next few times I speak. We'll now quickly go on to the next session after 10 minutes. Before that, I'd just like to acknowledge Mr. Behram Vakil, who's with us here, managing partner of AZB. And they, along with the chamber, we've got a book on doing business in India, which is going to be extremely helpful. The copies are all outside. And do take a copy with you. I think it's going to be, especially to our friends from Canada who are here, it's a very, very helpful and very extensive report. Thank you. Thank you, Kevin. Thank you, everybody.
Thank you very much.
Thank you, Kevin. Thanks.